Today, I got some real estate investing vocabulary, some vocab words today. First one up, vacancy rate. So your vacancy rate is a percentage of all the available units in rental property that are currently vacant or unoccupied at a particular time. So in Seattle and surrounding areas, we use between 3 and 5% vacancy rate. And what this does is account for the time that the units are unoccupied. So no one's living there. So if somebody moves out, we got to clean it up, get it ready, market it, show it, and get it released out. So that time in there is called your vacancy rate. Lost income, okay? Proforma income. So proforma, people don't always know what this means, is essentially a cash flow projection for the property, but it also kind of implies like the top it could possibly produce. So if an asset is underperforming, you'll see current rents and current expenses, and then we'll present it with the proforma rents and the proforma expenses. So we're saying, hey, if we go in here and spend $8,000 per unit, bring them up, the proforma rent will be, $1,500 a month based on market rents in the area. And maybe their current rents are at, $1,100. So we're going to increase them $400 a unit by doing this work. And also we can do proforma expenses. We're going to minimize the expenses here and here. We'll put in some efficiencies on the toilets and the electrical and reduce utilities, whatever we're going to do there. We can also increase proforma income by maximizing income lines such as laundry, parking, pet fees, all these different various income streams that people don't always utilize. We can maximize those and drive the proforma income up. All right, last one for you here today is cap rate. So you hear people talking about cap rates. That's short for capitalization rate. It's a very impressive term. So the capitalization rate is calculated by dividing a property's net operating income, the NOI we talked about before, by the current market value. You can also determine the value of a property by taking the NOI and dividing it by the cap rate. It'll pop out the value or like what we're going to offer on the property. So if I know the NOI and I know what going cap rates are in an area, I can more or less determine what we would want to offer on that property. Okay, so this ratio is expressed as a percentage. It's an estimation for an investor's potential return, and it's most useful when comparing real estate assets because it's really hard to compare like a 4-plex to a 16-plex or an 8-unit in Everett to a 12-unit in Tacoma, but the cap rate gives us something meaningful to talk about. So that's really what is important about the cap rate.